Yeah, exactly. And you guys are the best.
Hi, we're here at the IFC meeting at the World Bank IMF with Bob Diamond, the CEO of Atlas Mara. You're now going to be the #1 banker in Africa. Tell us where you see your Atlas Mara growing to?
Peter, when we had this vision, we're very, very clear. It's bold, but it's clear. Our ambition is to be the best bank, the best financial institution in sub-Saharan Africa. That's not going to happen overnight. It's going to be multiple acquisitions. It's going to be a lot of organic growth. It's going to be 4, 5, 6, 7 years. It's not an overnight investment. It's not passive. It's very active. So we're in the very early stages. But if I'm being honest, for having raised equity 9 months ago, we are absolutely delighted to have announced 3 deals, closed 1, and be very close to closing a second. So we feel good, but we also know that we have a lot of work ahead of us.
I mean, what banks are you seeing as a model? I mean, we have PTA was speaking, the CEO, founder was there. He has quite a huge private sector banking model. I mean, what do you see?
I get asked that a lot, and if I had a model, I probably wouldn't say it since you're recording this.
Yeah.
But we honestly don't, and I think there's a confluence of events happening. There are some very strong international banks on the ground. Barclays is a good example, and I was part of that growth, Standard & Chartered. They have some challenges today they didn't have 4 or 5 years ago around Basel III, around capital requirements. There are the Chinese banks who are not here physically, but they're following their customers, many of the state-owned enterprises. Many of the Europeans are pulling out. Trade finance, single country involvement just doesn't make sense with the pressure on capital in their home markets. There's a number of very strong South African banks who are more challenged today than they have been for quite a while around a weaker currency, higher NPLs, weaker economy. They're not always as welcomed in the rest of Africa as they are in South Africa. And I think the void, when you think about that, is who is driving lending to the African consumer and the African business. And I think for both Ashish and I, if there was one thing we could be known for, it would be the bank for small businesses in Africa. And that's a sector that needs investment, it needs lending, it needs a flow of credit, it needs a flow of capital. And we think it's an enormous opportunity both for what does Africa need, but also for our investors.
I mean, you're considered one of the best, you're the M&A banker's M&A banker, and you're doing it in Africa, where you've seen complaints that in the West, U.S., and Europe, M&A bankers are not getting the deals, not originating deals for their clients. They're sort of waiting for the phone to ring. Do you see that as a difference in what you're doing in Africa?
Well, I think in Africa there's a couple of things in the macro.
People say what?
It's a very strong economic growth story. Yet it's 46 separate countries with 46 leaders, 46 governments, 46 different regulatory environments. Yet on the other hand, we're seeing the real emergence of trading blocs. The East African community, the SADC community, ECOWAS, Francophone West Africa. And if you think about the East African community of Rwanda, Uganda, Burundi, Kenya, Tanzania, there's a lot more going on where the presidents and the finance ministers are really trying to make decisions that benefit the region, not just the countries. And so we're investing here against a backdrop of the heads of state and the finance ministers encouraging foreign investment, and even more than that, encouraging active operators, because they want to see the business model become more innovative. They can drive lending to African businesses and African consumers.
Thank you, sir. So you're taking the mid